Welcome to QLM Business News. Here are today's news stories. High mortgage rates continue to strain affordability for UK home buyers. The housing market in the United Kingdom remains challenging for many prospective buyers, as high mortgage rates continue to stretch affordability, according to Nationwide. Despite wages rising faster than house prices in recent years, the increase in mortgage costs has offset these gains. In June, Nationwide reported that house prices showed a slight growth of 0.2% from the previous month, bringing the average house price to £266,064. Annually, prices have risen by 1.5%. However, housing market activity has been relatively flat, with transactions down by approximately 15% compared to 2019. The surge in mortgage rates began after the Bank of England started raising its key interest rate in late 2021. Robert Gardner, Nationwide's chief economist, highlighted that current mortgage rates remain significantly higher than the record low seen in 2021, following the pandemic. For instance, a 5-year fixed-rate mortgage for a borrower with a 25% deposit was 1.3% in late 2021 but has recently been around 4.7%. This has led to a continued strain on housing affordability. Nationwide's data, derived from its own mortgage lending, excludes cash buyers and buy-to-let transactions. Cash buyers, who account for about a third of housing sales, have seen an increase in transactions by about 5% compared to pre-pandemic levels. In contrast, mortgage finance transactions have dropped by nearly 25% over the past year. Regionally, Northern Ireland experienced the largest price increases, with a 4.1% rise from the previous year. Wales and Scotland saw a 1.4% annual increase, while prices in England rose by 0.6%, with northern regions generally witnessing higher increases than the south. Despite recent reductions in mortgage rates by some major lenders, home loan costs remain considerably higher than pre-pandemic levels. According to Moneyfacts, the average rate for a 2-year fixed mortgage deal is 5.95%, while a 5-year deal averages 5.53%. Attention is now on the Bank of England's Monetary Policy Committee, MPC, and its next meeting on the 1st of August. There is speculation about a potential rate cut, which could rejuvenate buyer sentiment. Sarah Coles, head of personal finance at Hargreaves Lansdown, noted that a rate cut could happen as early as August, although persistent inflation and rising wages might delay it until the autumn. The Bank of England recently indicated that around 3 million households will face increased mortgage payments in the next 2 years as their current deals, set before the rate hikes, expire. For a typical household seeking a new deal, monthly mortgage repayments are expected to rise by about £180, or 28%, with some 400,000 households potentially seeing increases of 50% or more. In May, Bank of England figures showed a slight decrease in the number of mortgages approved, falling to 60,000 from 60,800 in April. The amount borrowed through mortgages also dropped sharply to £1.2 billion from £2.2 billion the previous month, excluding those remortgaging with the same lender. This news story is brought to you by QLM Business News, your digital media channel. Visit QLMBusinessNews.com for more business news stories. Also follow us on Facebook, X, and YouTube. To help QLM Business News bring you more news stories like this, please like, share and subscribe.